All right, let's dive right in. Today, we're breaking down a really simple but incredibly powerful strategy. It's all about improving your trade timing and, just getting in sync with the market's natural rhythm. You know the feeling, right? We've all been there. You spot what looks like the absolute perfect setup, you pull the trigger, and bam, the market just instantly reverses on you. It has to be one of the most frustrating things in trading. But what if the problem isn't your signal? What if it's just your timing? Well, the good news is the fix doesn't mean you have to clutter up your charts with a bunch of new, complicated tools. Nope. It's actually all about changing how you see the market, just by bringing a couple of different time frames into harmony. And that brings us right to our first section, seeing the bigger picture. You see, before we can even think about perfecting our timing, we first got to zoom out and understand what the main story of the market is. The whole idea here is called multi-timeframe synergy. It sounds fancy, but it's a really simple concept. Think of it like this. We use a high time frame, that's our satellite view, to figure out the market's overall direction. Then we use a low time frame, our street level view, to find the exact moment to get in. And this right here really shows you the night and day difference. When you're just stuck on a single chart, you're basically just reacting to all the market noise, and you can completely miss the bigger picture. But with this multi-time frame view, you're aligning yourself with the dominant trend. And that, my friends, is how you start stacking the odds in your favor. Okay, so let's start building this thing out, starting with section 2, finding your trend direction. For this, we're going to use the 4-hour chart as our strategic satellite map. And why the 4-hour? Well, it's kind of the sweet spot. It's slow enough to filter out all that distracting daily noise, but it's still fast enough to catch those big, important market swings. It gives us that perfect bird's eye view. The setup, honestly, it could not be any simpler. All you need is a 4-hour chart and one tool, the 50 exponential moving average, or 50 EMA. We use this one specifically because it's a well-known standard for spotting the medium-term trend. A ton of traders are watching it, which basically makes it a reliable line in the sand between bullish and bearish territory.
Now this table, this is your new command center. It's super simple. If the price on that 4-hour chart is above the 50 EMA, your bias is bullish. That means you are only, and I mean only, looking for reasons to buy. And if the price is below the 50 EMA, your bias is bearish, and you're only looking for sells. Seriously, this one rule can instantly get rid of half of your bad decisions.
Okay, so you've got your direction from the satellite map. You know if you're supposed to be a buyer or a seller today. But that leads to the million-dollar question, right? When exactly do you get in? And that's where we zoom in. Welcome to section 3, pinpointing your precise entry. Now we switch over to our 15-minute chart. This is our street map. This time frame is perfect for entries because it's detailed enough to show us those little shifts in momentum we're looking for without being so fast that we get shaken out by every little random blip. For our actual entry signal, we're going to use a classic called RSI Divergence. Look, all divergence means is that the price and a momentum indicator, like the RSI, are starting to tell two different stories. So price might be pushing down to make a new low, but the RSI is telling you that the downward momentum is actually getting weaker. That disagreement, that's our cue. So here's the playbook for a buy setup. First, you confirm your 4-hour trend is up. Price is above that 50 EMA. Check. Then you hop over to the 15-minute chart and just wait for a little pullback. You see the price make a new lower low, but at the same time, the RSI indicator makes a higher low. That's your bullish divergence, and that is your high probability signal to buy, perfectly in sync with that bigger trend. And for a sell? You guessed it, we just flipped the script. It's the exact opposite. First, confirm your 4-hour trend is down, price is below the 50 EMA. Then, on your 15-minute chart, you wait for a little rally. Price makes a new higher high, but the RSI makes a lower high. That's bearish divergence. It's telling you that rally is running out of gas, and it's a great time to jump in on a sell, again, in harmony with the main trend. So let's put it all together now in our final section, the strategy in action. This is going to be your complete checklist for executing with what we're calling temporal harmony. Here it is, just 4 simple steps. 1. Direction. Check your 4-hour chart. 2. Patience. Switch to the 15-minute and just wait for the market to give you a discount. 3. Signal. Spot that clear RSI divergence that agrees with your direction. And 4. Execute. Pull the trigger with confidence because you know the major trend is on your side. Look, if you take away only one thing from all of this today, let it be this. You only act on the small picture when it agrees with the big picture. That's it. That is the entire secret. That's the essence of temporal harmony. Now, what we've walked through is a really powerful framework using the 4-hour and the 15-minute charts with the 50 EMA and RSI. But the real beauty of this whole concept is how flexible it is. So I'll leave you with this question to chew on. What other time frames and signals could you combine to create your own unique version of temporal harmony? Thanks for tuning in.